How to use the Tweezer Trading Strategy. Today, we'll introduce the Tweezer strategy for quick trades starting at 5 seconds. The Tweezer is a candlestick combination or pattern that signals a potential trend reversal. It consists of 2 candles with opposite directions but identical extremes. In a downtrend, they share the same lows, and in an uptrend, they share the same highs. These extremes can be either the closing prices of the candles or their shadows. The candles in the combination can appear consecutively, or there may be one or more candles between them. What to do when you see a signal? Monitor the chart and wait for a candlestick with the same extremes to appear, preparing for a potential change in direction. Once the tweezer is formed, you can open a trade in the new direction. If the tweezer appears near support or resistance levels, it strengthens the signal. In this case, you can act immediately without waiting for the confirmation from the next candle. Use the tweezer strategy in combination with other indicators such as RSI, MACD, or moving average. These indicators help to confirm the signal from the pattern. Learn how to use RSI, MACD, or moving average in these videos. Try now. Follow the link in the description.